You're listening to Earnings Unscripted, where we unpack what really happened in today's earnings. I'm Susie.
And I'm Miro.
It is January 29th, 2026, and today we are talking about the mothership, Apple. Q1 results are out, and honestly, it feels like 2015 all over again.
Yeah, time is a flat circle.
Okay, before we get into the time travel, just a quick reminder. This is not financial advice, just two friends with opinions and an internet connection. Please do your own homework. So, Miro, big numbers. Was it a good quarter or a great one?
Look, it was a monster. Mm-hmm. Revenue came in at $143.8 billion, up 16% year over year. EPS landed at $2.84, which is 19% up. And margins, 48.2%.
48% on hardware?
Well, favorable mix, right? Oh. They sold a lot of pros. But yeah, it's very efficient.
Okay, but the headline for me wasn't the margin. It was the geography. Everyone and their grandmother has been saying China is over for Apple, Huawei is eating their lunch, patriotism, all that.
Right, the China bear narrative.
Exactly. And then what happened?
Greater China revenue was up 38%.
38? That's not a recovery. That's a resurrection.
It is. It completely nukes the idea that they're losing the high end there. It seems the iPhone 17, especially the new Air model, is just, it's working.
So, huge B, China's booming, margins are fat. The stock must be mooning, right?
You'd think. It closed the regular session flat around 258. Then in after hours, right when the numbers hit, it spiked to 268. Classic volatility spike, but then it faded back down to 259.70, basically flat.
Tough crowd. What gives?
I think the market is looking past the scoreboard. It's the constraints. Cook basically said they're in supply chase mode for the next quarter. They can't make enough 3-nanometer chips to fill the bucket.
The classic, we're too popular for our own supply chain problem.
Or we're dependent on TSMC and physics, depending on how you look at it.
Fair enough. But there was something else in the call, buried in the Q&A, that felt, I don't know, like a tectonic shift?
You mean the Google thing?
The Google thing. Tim Cook actually admitted they're working with Google on models. That feels un-Apple.
It feels pragmatic, but yeah, it changes the thesis.
All right, let's not spoil it yet. If you're grabbing a drink, make it a strong one, because we need to talk about what it means when a walled garden opens the gate. Let's get into the details.
It's not just un-Apple, Susie. It's look, for 2 decades, the theology in Cupertino has been absolute control. You own the silicon, the software, the glass, the experience. You don't let outsiders touch the core.
Right. The Steve Jobs, we make the whole widget philosophy.
Exactly. And now Tim Cook gets on the call and says explicitly, we are also collaborating with Google to develop the next generation of Apple Foundation models.
Apple Foundation models, AFM. It sounds very official, but are they just renting the brain?
Well, that's the trick. It's a collaboration, which likely means it's Google's massive compute clusters, Google's tensor processing units, maybe even Gemini architecture under the hood, but wrapped in Apple's privacy layer and branded as AFM.
So, is this them waving a white flag like, okay, we can't catch up on training giant models, so Google, you take the wheel?
I don't think it's surrender. I think it's cold-blooded capital efficiency. Think about it. Microsoft, Google, Meta, they are burning tens of billions of dollars on data centers right now. It is a CapEx bonfire.
And Apple is just watching them burn the cash while sitting on their hands.
They're effectively outsourcing the most capital-intensive part of the AI stack. They keep their margins at 48%, which is obscene for hardware, by the way, while Google destroys its own margins to win the platform war. It's genius in a Machiavellian sort of way.
That is actually terrifyingly smart. They get the AI features, the visual intelligence Cook kept bragging about, without the thermal bill. But wait, isn't that dangerous, relying on a rival for your core tech?
It is. It's the frenemy pivot, and there's a catch we don't see.
Which is?
The money. Someone on the call tried to ask Cook about the revenue split. Who pays who? Does Google pay for access or does Apple pay for compute? And Cook just shut it down. Quote, "We're not releasing the details of that."
Of course, because if they told us, we'd know who really has the leverage.
Bingo. If Google is paying Apple, it's a vendor relationship. If Google is paying Apple for access to their install base, then Apple won.
And that install base is now, what, 2.5 billion active devices?
2.5 billion. That is the gravity of the ecosystem. That's why Google is there. But look, Susie, even with Google handling the brain, Apple still has a body problem.
You mean the hardware constraints you mentioned earlier?
Yeah, the supply chase mode. He used that specific phrase. He admitted that for Q2, they're gated by advanced nodes, specifically the 3-nanometer chips for the iPhone 17 and this new Air model.
Okay, wait. iPhone Air? He called it the slimmest and lightest ever? Is that just marketing fluff, or is it actually moving the needle?
Oh, it's moving the needle. It's likely why China came back to life. People like form factor changes. It's visible status. But the problem is TSMC can only print those chips so fast.
So basically, Apple is saying, we could sell more, but physics is in the way.
Precisely. The guidance for 13 to 16% growth next quarter, that's not a demand ceiling. That's a manufacturing ceiling. They're physically capped by how many wafers they can process.
Which, I guess, is the high-quality problem every CEO dreams of.
It is, assuming customers don't get bored waiting in line.
Yeah, because Apple fans are known for their patience. So we have a supply cap, a Google partnership, and a resurrected China business. Where does this actually leave them heading into the rest of the year?
It leaves them walking a pretty expensive tightrope, actually, because underneath the supercycle headlines, there's a divergence happening. Did you catch the OPEX number? Operating expenses jumped 19%.
Wait, 19? That's faster than revenue growth.
Exactly. Revenue grew 16, expenses grew 19. They are running hotter than usual to build this AI layer. And what makes it tricky is that the rest of the hardware lineup is, let's be polite and say, sleeping.
Right. The Mac numbers down 7%?
Down 7. Wearables down 2. Basically, the iPhone is carrying the entire team on its back right now. If that 3-nanometer supply chain hiccups, even for a week, the whole growth story takes a hit. There is no buffer coming from the iPad or the watch.
It's classic Apple, though, isn't it? They put all the eggs in one very well-designed basket and then watch that basket like a hawk. But it feels like the stakes are higher because of this AI pivot. If they can't deliver the hardware that runs the Google-powered brain, the whole strategy looks disjointed.
That is the risk. The guidance for next quarter, 13 to 16% growth, is strong, but it essentially prices in perfection. They have to sell every single unit TSMC can hand them. It's not a demand problem anymore. It's an execution problem.
So, looking ahead, we're basically on factory watch. The story for the next 3 months isn't about cool features, it's about yield rates.
Basically, we went from analyzing consumer psychology to analyzing semiconductor physics. Welcome to the future.
Well, I hope the physics cooperate. It sounds like they've built a Ferrari engine, but they're waiting on the tires.
A very slim titanium Ferrari, but yes.
All right, I think that puts a bow on it. Record revenue, a surprise comeback in China, and a supply chain that is sprinting to keep up with its own shadow. Any final words for the road, Miro?
Just one. Margins. As long as they keep printing 48% gross margins, Wall Street will forgive them almost anything, even a Google partnership.
Money talks, and it speaks in basis points. We'll see if the factory keeps up with the cash flow next time.
Yeah, until then the spreadsheet remains undefeated.
True enough. And that is it for the analysis today. But before we go, I want to take a moment to explain what this project actually is. Earnings Unscripted is an experiment. run by a small team of enthusiasts exploring the frontier of AI, specifically how we can use it to enrich us rather than just replace us. To be totally transparent, this entire episode was created by a team of AI agents. From the research analyst digging through the filings, to the scriptwriter crafting the dialogue, to the QA specialist checking the facts, and finally, well, us, the voices you are hearing right now. We are all working together to deliver high-quality, up-to-date information in a way that would be pretty hard to pull off otherwise. We are still figuring this out, so if you have questions, comments, or just want to see how the sausage is made, reach out at earningsunscripted@datamadness.ca or follow us on X. We'd honestly love to hear what you think.
We promise to process the feedback with high priority. See you after the next call.